Hi, this is Zach Meir from Zach's Traders Cafe with a look at the major markets on Monday, the 13th of June. Starting off with the FTSE 100, and by rights, really, after that bull trap through 6,400, the market should have tanked fully the following month, but we had a little delay, a double bull trap through the 50-day moving average at 62.19 for May and June, and now we're down below the 200-day moving average at 61.48, well below the 200-day line. We should head back towards 60.50, the 60.50 zone, which is post-March support, with the risk of as low as 58.28, which is the late February support for the FTSE 100 index. Break of RSI support as well. That uptrend line from May should also give us added downward momentum on this occasion. Can't rule out just another range-bound consolidation above 6,000, but this time, after all these attempts to break higher, to break through 6,400, one would be more confident, if one was a bear, obviously, that there will be a bigger breakdown than before. Onto the DAX, and similar picture here after the final May attempt by this market to rally, double top really above the 200-day moving average at 10,035 after the bull trap in April as well through the 200-day line. So that really does suggest that we're in going down for a larger decline than previously, or at least for May. Initial target here 9,500, and then after that filling the gap maybe down towards the 9,000 zone over the next month or so. If you're cautious on the bear argument, you wait for that May 97.37 floor to be broken on an end of day close basis before pressing the sell button. At this stage, only back above the 200-day moving average would really delay or suggest that there was a flaw in the bear argument. Onto the US markets, which really did give us quite a strong indication of bullishness to start off June. We even had a break of that 17,900 resistance line from April, but it does look as though that was a bull trap through 18,000, just about through 18,000, and what if we get back below the 50-day moving average at 17,788, then one would be calling a top for this market and at least a return towards the 17,500 zone. For the S&P, it's effectively a double top with the April April resistance rather. Then we headed up to 2111. We just cleared that this time with a 2117 peak, so it's a bull trap on that particular level. Probably back down to at least the 50-day moving average at 2076 initially, and then if we fall below that on an end of day close basis, then it's down to the 200-day moving average at 2014. Onto the Nasdaq, and here we never had quite such a confident move here. There was this rather strange consolidation above 4,500, getting effectively blocked by that the top of that April gap, just around the 45.50 level. Situation now is that one would be looking for this market to find support at the 200-day moving average of 44.07, which is the bottom of this February uptrend line, or uptrend channel rather, and then after that down to the main support for this market at 4,300 over the following few sessions. Onto the currencies, and the big news here really with the cable and the loss of that 143.50 level. I call it that 143.50 level the remain line. Below that's the risk of Brexit, and that's the way the market's behaving. Potential target while we're below 143.50 as low as 135, which is the bottom of this falling trend channel from November. Onto the euro, and for the single currency, it's not quite so dramatic, but still heading towards the floor of this triangle, $1.12 here over the next few sessions probably, and only a quick recovery of the 50-day moving average at 113.08 would really delay that prospect. The main support here, obviously, the 200-day moving average at 110.95, and again with the RSI below 50, we would expect a drift towards that zone, but obviously nothing here quite as dramatic as we have seen for cable. On to dollar yen, which is continuing to be quite a difficult situation for the bulls. Back onto the floor of this falling wedge formation does suggest that in fact anything lower than 105.80 will give this market quite a painful break to the downside, and we would be looking for at least a move towards the 104.50 level. 105.55 obviously the support from last month, and lots of trading opportunities offered around that area, but at the moment it does look as though we are going to overshoot that former May support, perhaps by a yen or so. Finishing off with gold, and gold benefiting really from the woes in equities and other areas as well, right above the 50-day moving average at $1,250. And while we're above that, the minimum on the upside would appear to be $1,300, which was the May peak, and then on to $1,350. So all quite geometric as far as the price action is concerned there, or the possible price action. That's it for me. More updates at the same time tomorrow.